issue of shares for consideration other than cash. So this is kind of a barter system only. Usually we issue our shares and we receive the money, but instead of uh, issuing your shares and receiving the money, the company can issue the shares for any asset. All right, like you might purchase any asset for credit, and instead of paying them in cash, we actually are making the payment by issuing the shares. Is this clear, Niharika?
Yes, ma'am.
All right. So when we purchase our asset, our entry is asset account debit to vendor account, since we are purchasing the asset on credit. All right. So this is our basic entry. When we will make this payment, okay, we can make this payment in shares. There are two ways, whether at par or at premium. So our entry, if I'm issuing the shares at par, our entry will be very simple. Vendor account debit, because this liability will get exhausted by issuing the shares, okay? And to share capital account, because I'm raising my capital against this purchase of asset. All right, Niharika. Next is,
Yes,
if
ma'am.
I am issuing the shares for premium, all right, I'm not receiving any money. The thing is, what will happen? We have to calculate the number of shares. All right, we will come to that point also in a minute, but our entry will be vendors account debit to share capital account to security premium account. All right, so how this will happen? Let us say we have purchased an asset for rupees 11 lakh. Okay, or let's say 1 lakh 10,000. It will just 11 lakh 10,000. It will just make it easier to calculate. Just a second. So let us say we have purchased an asset for rupees 1 lakh 10,000, and we are issuing shares for the same. If these shares are getting issued at par, number of shares will be at par of rupees 10 each. All right, let's say our shares are for rupees 10. So number of shares to be issued, it will come, we have 1 lakh 10,000 rupees to be paid, and each share is for rupees 10, so it will be 11,000 shares. Is that correct, Niharika? Any doubt in this part?
No, ma'am.
All right. Now let us say if the shares are getting issued at premium of rupees 1 each. All right. So what will happen now? Number of shares to be issued is equals to 1 lakh 10,000, and this will become 10 plus 1. Okay. So this will become 10,000 shares. Clear, Niharika?
Yes, ma'am.
Okay. So this is called as purchase consideration. Okay, the amount that we have, the amount that is to be paid is our purchase consideration. Now this was very simple transaction that we had taken, that we are only purchasing an asset. Now we can issue the shares if we are purchasing a business. Okay, we can purchase a whole business, and when we are purchasing the whole business, instead of making payment in cash money, all right, we can make the payment in the share capital, okay, by issuing the shares. All right, Niharika, this topic
Yes, ma'am.
is a very basic topic that we are studying in the 12th standard. Later on in the higher studies in the college and the post graduation, CA, MBA, and everything, we study higher version of this topic, okay, purchasing a business and making payment in the shares. All right, so still our entry won't be that much complicated. It is quite easy only. We are purchasing the business. So when we are purchasing the business have assets and liabilities both. Is that correct?
Yes,
Yes,
ma'am.
so we are acquiring all the assets and all the liabilities. So the assets that we are acquiring at agreed value. whatever value we are agreed at, we are going to debit the sundry asset account with that agreed value. Because there can be a book value, a market value. The agreed value is the value at which the seller and purchaser agreeing that this is the value that I'm selling you, and the purchaser is agreeing that I'm purchasing this asset at this value. Get the point, Niharika?
Ma'am, can you repeat that
Yes,
again?
definitely, definitely. See, if let's say there is a price, okay, price written 5,000 rupees. There is a very beautiful dress, okay. You went to the shop, you saw in the boutique a 5,000 rupees dress. It's a very beautiful one, okay. So it's a market price, the price that is written. Let's say it is a market price, okay. Now you want to purchase that dress at 3,000 rupees. All right, you say, yes, the dress is beautiful, but I don't think so that it is worth more than 3,000 rupees. The boutique person, the seller, they say, I won't sell it below 4,000. And then you both come to agreed at that, okay, let's say I'm 3,500. Okay, both of you agreed at 3,500 rupees. So this is the agreed value. Similarly, when someone is selling the business and you are purchasing the business, they will have something written in their books. Okay, they will have some the cost, okay, like that there will be a cost of the that dress that might be obviously lower, but the person who is selling it, they don't want to sell it at the cost. They want to have something profit. Everyone wants to have profit, right? So they won't sell it at the cost. All right, now you don't want to give a lot of extra money, so both of you will agree at some amount in between. Whatever price you both are getting agreed is the agreed value, and that is the value at which you are going to record the value of assets and liabilities when you are purchasing the business. Is it clear now, Niharika?
Yes, ma'am.
Okay, good. So the assets and liabilities both will be written at the agreed value. Okay, and to vendors account, this is a special part here. This will be the difference. See, when you're purchasing things, all right, you're purchasing assets and you're purchasing liabilities. In any business, we have three components, right? You can just picture the balance sheet. You have the capital, you have the outside liabilities, and you have the assets. The outside liabilities and the capital is always equal to the assets, right, Niharika?
Yes, ma'am.
So when you're purchasing a business, you are acquiring all the assets and you are also acquiring the liabilities. So the difference is actually the capital amount, right? That you are not acquiring. So you have to make the payment for the same. Are you getting my point, Niharika? All the
Yes,
assets
ma'am.
and liabilities. So there is some extra money. Your assets will always be more than the liabilities. So the money that is spending, that amount you have to pay to that person, right? So
Yes.
that is the amount that purchase consideration can be given in your question. Usually it will be given in your question, okay, that you are purchasing these assets and liabilities and you are going to make payment of this much money. So you will usually have value, sundry assets value, sundry liabilities value, and the value, the amount that you are going to pay to that person. All right. So usually there will be a difference, okay, if you are making a higher payment. Okay, net assets is sundry assets minus sundry liabilities. So if the net assets, it is all written on the screen, okay, Niharika? If net assets is more than the payment made to the vendor, then you are acquiring assets of more value and making the payment lesser. So it is your benefit. Okay, so it is a capital profit, so it will be written on the capital reserve account. Okay, so capital reserve account will be credited. If you are acquiring the net assets but you are making the payment to vendor more than the net assets you are acquiring, that means you are also purchasing the goodwill. Okay, why you are making an extra payment? For the goodwill of the business. All right, Niharika. So then goodwill account will be debited. Is this all entry clear?
Yes, ma'am.
Everything? All right. So the payment made to vendors for purchase of asset or business is called as purchase consideration. And this amount, either they will give you the a lump sum amount, or either they will give you that this number of shares are issued at this price. All right, Niharika. So when we'll solve the question, you will get more clarity. Shall we proceed further now?
Yes, ma'am.
Okay.